They tell us debt rises because economies struggle, that governments borrow because they have to, and that banking systems expand credit to stimulate growth. But what if the opposite is true? What if debt doesn't grow despite economic collapse, but because of it? Today's story uncovers a hidden machine, a financial engine so powerful, so deeply woven into modern civilization, that even when everything falls apart, it expands. A system that turned crises into profits, defaults into opportunities, and national collapse into the most predictable business model in history. This is the story of the debt machine that grows even when economies collapse. And by the end of this video, you'll see why the machine isn't failing. It's working exactly as designed. To understand the machine, we need to go back to a moment when money stopped being what people thought it was. The early 20th century, a time when gold-backed currencies, banks held real reserves, and nations believed money had a fixed shape and value. But behind closed doors, central bankers were beginning to experiment with a radical idea. What if the power of a nation wasn't measured by the gold in its vaults, but by the amount of debt it could create? This idea didn't come from a single person. It came from a network of economists, financiers, and political leaders who all saw the same opportunity. If money became elastic, expandable, contractible, and infinitely creatable, whoever controlled credit creation would control the world. Enter the Federal Reserve in 1913. Enter the Bank of England's quiet reforms. Enter the rise of central banking as the real center of national power. And most importantly, enter the birth of fractional reserve banking, a system where banks could lend far more money than they actually held. The debt machine was switching on. But not fully. Not yet. It needed something bigger. Something catastrophic. Something that would push governments to embrace debt at a scale they never imagined possible. That moment would come very soon. World War I. An event so destructive it rewrote the global financial map. Nations discovered that war could not be fought with gold. It could only be fought with credit. And suddenly, governments weren't issuing debt reluctantly. They were issuing it obsessively. Bond markets exploded. Central banks coordinated. Money printing became a patriotic act. And after the war, when economies struggled, leaders promised to rebuild using, once again, more debt. Then came the Great Depression. Businesses collapsed. Banks failed. Millions lost everything. And yet, the debt machine grew again. Why? Because each collapse forced leaders into the same decision. A decision they believed had no alternative. Borrow more to save the system. Crisis wasn't the enemy of the machine. Crisis was its fuel. But the machine still lacked global reach. The world still clung to the gold standard, a chain that limited how fast debt could grow. And in 1944, the machine would get the upgrade it was waiting for. Bretton Woods. The meeting that transformed financial history. For the first time, nations agreed to a system where global currencies were indirectly tied to the US dollar, and the dollar was tied to gold. But this design had a hidden consequence. The United States became the only country that could print the world's reserve currency. And the world needed dollars. To trade, to rebuild, to grow. So how did they get them? By borrowing. Debt became the world's primary import, and the US became its biggest exporter. Within 2 decades, the amount of dollars circulating globally far exceeded the gold backing them, until the day the imbalance became impossible to hide. 1971, Nixon closed the gold window, and with that single announcement, the machine shed its final limitation. Money no longer had an anchor. Debt no longer had a ceiling. Banks no longer had meaningful restrictions. The machine was now free. Free to expand endlessly. Free to survive any crisis. By the 1980s, something unprecedented happened. Global debt began outpacing global GDP. Governments borrowed faster than they produced. Consumers used credit instead of income. Corporations leveraged themselves to chase profit. The real economy grew. But the debt economy grew faster. And then, the first major collapse of the modern debt era, the Latin American debt crisis. Countries defaulted. Currencies crashed. Millions were thrown into poverty. And yet, the debt machine didn't shrink. It expanded. How? Because the crisis allowed global lenders to restructure loans, impose new conditions, and extract even more in interest over time. The suffering of nations became a revenue stream. Pattern was forming, and it would repeat again and again. Section 5. Fallout. Every crisis feeds the machine. Narrator. 1997. Asian financial crisis. 2000. Dot-com crash. 2008. Global financial crisis. 2020. Pandemic collapse. Different triggers. Different stories. Same outcome. Debt went up. Every time. Economies shrank. Debt grew. People struggled. Debt grew. Currencies weakened. Debt grew. And here's the most shocking part. The machine doesn't just survive collapse, it requires it. Because during a crisis, governments borrow more. Central banks print more. Interest payments rise. Bailouts expand. Assets become cheaper for those holding liquidity. And entire nations become financially dependent. The machine grows because collapse forces action. Action that always leads to one solution: more debt. But this story doesn't end with old crises. Today, the pattern is repeating again. Look at the world right now. Global debt has surpassed $312 trillion. More than 3 times the size of the global economy. Government debt is hitting record highs. Consumer debt is at historic levels. Corporate debt has become the backbone of business. And despite all this, economies everywhere are slowing. Yet the machine continues to accelerate. Why? Because it has evolved. Today, central banks control interest rates that determine the cost of borrowing for billions of people. Today, digital money allows banks to create credit instantly with no physical limitation. Today, financial markets are built on derivatives, contracts whose value is tied to the future debt of others. The machine has become self-sustaining. And the most disturbing truth? Even if the economy collapses tomorrow, the machine will keep growing. Debt will rise to stabilize markets. Governments will print to protect citizens. Central banks will intervene to prevent disaster. The same cycle. The same fix. The same outcome. Because collapse isn't the end of the system. Collapse is a stage of the system. A design feature, not a flaw. Over the decades, many have tried to slow the machine. Balanced budgets, austerity measures, regulations, stress tests, monetary tightening, currency reforms. None of them worked. Why? Because every fix relies on the same system it's trying to reform. You cannot fix a debt-based economy by reducing debt for long. The moment growth slows, the pressure returns. And the machine demands more. More liquidity, more credit, more borrowing, more dependence. The system isn't built to reduce debt. It's built to expand it forever. Section 8. Final message. What this means for us. Narrator. So what should we learn from all this? And what does it mean for the future? Here are the 3 takeaways the data makes impossible to ignore. Takeaway 1. The modern economy is not powered by money, but by debt. What we call economic growth is often just the expansion of credit. GDP rises because borrowing rises. Asset prices rise because borrowing rises. Government spending rises because borrowing rises. Debt isn't a side effect. Debt is the engine. Takeaway 2. Crises are integral to the system, not accidents. Every collapse resets the system. It allows the machine to expand, restructure, and tighten its grip. This is why the system doesn't break during crises, it multiplies. Takeaway 3. The machine will keep growing until something replaces it. Not until it collapses. Not until people wake up. Not until politicians act. It will continue until a new monetary system replaces the old one entirely. And historically, such transformations only occur once in a century. Which means, we are living in the final chapters of the current system. Closing warning and call to action. Narrator. The debt machine is still spinning at full speed. Governments won't stop it. Banks won't slow it down. and most people don't even know it exists. But you do now. And as this machine grows beyond anything the world has ever seen, one question becomes impossible to avoid. When a system built on infinite debt meets a world with finite stability, what happens next?